Hey guys, I got a lot of positive feedback on my Forex video, so I thought I'd talk a little bit about the basics of trading stocks. So what I suggest you to do is to go to the same website, Investopedia.com, make an account, it's free, and then over on the right here you'll see Simulator. And what that'll allow you to do is basically mock trade some stocks. I think depending on which game you join, you have to join a game first. They'll give you either $100,000, sometimes $1,000,000, and then you can basically trade with that, no risk involved, and just if you want to sort of try things out and get a grasp on what it's all about. So I'll just show you two simple trades here. Obviously, the concept of trading stocks, if you buy a stock, you're looking for the price of the stock to improve over time, and then you sell it when it's higher and you make money. There's another kind of trading, another basic kind of trading called short selling, which essentially benefits you when the stock price goes down. I won't get too far into it, but basically what happens is your broker is essentially lending you shares of a stock. You're then selling them immediately, so you have the cash from the stock at, let's say, $10, and then you're hoping that over time the price goes down to, let's say, $5, and then you buy the shares back and return them to the original owner. So you're actually making money off the decline in the stock price, because when you buy them back, you can buy them back for a cheaper price than what you sold them at right when he gave them to you. I'll get to that a little bit later, but we'll do a regular stock buy and then we'll do a short sell. So here you go up to the trade button. I have $100,000. You see I haven't done anything in this account. What I like to do is I like to go to Yahoo Finance. I think that's a great website. It'll show you graphs. You can look up any stock basically on a long-term basis, 1 year. So I'm going to buy Google. To be honest, I haven't really followed the market too closely in the past week, so I don't really know what Google's doing. But we'll just buy Google for a price. It looks like it's obviously up over the long term, over a year. Google's been a very profitable company. But let's say we want to gamble and buy some shares of Google. So what you're going to do in stock symbol, type in GOOG, that's the symbol for Google. It'll pop up down here. You can click on it. And obviously we want to buy. Sell short is what we're going to do next, but we want to buy this time. And then quantity, let's say we'll do, I think it's about $1,000 a share. So we'll maybe do 10 shares if they allow us. Sometimes due to diversification rules, they don't allow in this game. So 10 shares is fine. So what this is right here, we want to do a market order. I'll get into limit and stop orders later. But market order just means you want to buy it right now at the current price it is. It's going to fluctuate a little bit as you're even making the order. And then duration, good till cancel. That just means if you're doing one of these special orders, the order is always going to be trying to be filled. You can do something called a day order, which means that when the market closes, the order is going to cancel. So tomorrow, let's say you're only trying to buy it at a certain price, and then if the price never gets there and it's the end of the day, the order is just going to cancel. It won't fill tomorrow. So this is just a basic order. We'll preview the order. It'll tell you the total cost of the order. It looks like it's about $10,000. Actually, let's go back and we'll buy some more shares. Let's buy about 25 shares, just to see if it moves a little bit, so you can see how your overall value improves or declines. Sorry. So submit the order. 25 shares. They do charge commission. Obviously, it's not real commission, but it's trying to simulate what it's like in the real world when you do have to pay commission. It sucks. Anyway, all right, so that trade is in. You can go over to portfolio here, and it'll show your current position with the trades you've made. So you see Google here, current price 1303, 1330 actually, sorry. And then so the second trade we want to make here is a short sell, like I said. And I noticed today that there is a company, LifeLock. I think they basically insure against identity theft. And so they're up a lot today. They're up 16.7% at the moment. Probably going to be up a little more at the end of the day. And so what I'm going to do is I'm going to bet that this is sort of artificially inflated. They had a very good Q3 earnings, as you can see. See, I also like this website because down here it'll give you headlines. So it's been a big stock traded today. Their Q3 results were a lot better than what they should have been. So a lot of people are buying this stock today. So I'm going to try to take advantage of this artificial inflation in the stock price and make money off the decline when it returns to normal. So I'm going to actually short sell this. So let's go lock in here. Life lock, there we go. And like I said, we're going to sell short, so it means we're short selling as I described earlier. And so let's buy about 1,500 shares. It's a pretty cheap stock. Again, market order, good till cancel, preview. And here you go. It's about $23,000. So again, we're going to make money if this stock declines in value. So we actually want to see the price go down. Go ahead and submit it. And there you go. So now we can go back to our portfolio. Our portfolio here. And you see we have one in our stock portfolio and one in our short sold portfolio. So basically this is the one that we want the price to increase on, and this is the price we want to decrease on. Now you can also trade options in this, which again I will get to a little bit later. But that's pretty much the basics of it. I'll check back in a little bit, and I will see if anything's happened to these stocks. But obviously nothing really is going to change too much in the short term. So we'll check back in a little bit and see how they've done.